Hi everyone, welcome back to the Web3 channel. My name is Zach. In this video, we're looking at some interesting news regarding potential regulation. I'm not sure what you would call it, but we're looking at some banks not being very happy, or at least maybe being led to by US government officials to do something kind of personal, if you like, with Uniswap's founder. Let's just jump into it. The bank account was shut down by JPMorgan Chase. Shadow debanking allegations are surfacing. Banks do not need to provide an explanation to shut down accounts owned by clients deemed too risky, according to former CFTC Commissioner Brian Quintenz. So what exactly is happening here? Well, on Sunday, Hayden Adams, CEO and founder of the popular decentralized exchange, or DEX, Uniswap, claimed that his JPMorgan Chase bank accounts were shut down with no explanation. In addition, Adams stated that the incident was personal in nature, as he knew many individuals and companies who have been similarly targeted simply for working in the crypto industry. Definitely not a great look, but let's go through what's happening here. This week, JPMorgan Chase closed my bank accounts with no notice or explanation. I know many individuals and companies who have been similarly targeted simply for working in the crypto industry. Thanks for making it personal, with a rocket emoji. I do wonder what this signifies. Whoopsie. I do wonder what this signifies. Does this mean, of course, that there's going to be some level of backlash from this user? Only the founder of Uniswap, not a big deal. Former Commodity Futures Trading Commissioner Brian Quintenz has responded with a comment suggesting that the move was likely an instance of shadow debanking of crypto by the Federal Reserve and the Office of the Comptroller of the Currency Bank Examiners. Quintenz explained that the banks are contractually prevented from telling customers the reason for ending the business relationship if they deem too risky. Although most users commiserated with Adams on the alleged debanking, others maintain there is no universal right to a bank account, and therefore banks have the discretion to act as they deem fit. Where we can see, of course, Brian Quintenz's actual response being likely a shadow debanking of crypto by the Federal Reserve or USOCC bank examiners, who with direction from the top. If the examiner told a bank that a certain customer is too risky and the bank ended that relationship, the bank is contractually prevented from telling that customer why. Of course, they did not offer any other further information to support his claim, but provided a link to Wyoming Senator Cynthia Loomis' opinion piece published in the Wall Street Journal in November. In the article, Loomis criticizes the Fed for its failure to register several Wyoming crypto-related special purpose depository institutions as banks, thus preventing them from getting access to the federal payment system. In another response to Adams' post, Kraken CEO Jesse Powell cited his own tweet from 2018 where he described JPMorgan Chase had closed the crypto exchange's payroll account on a 5-day notice sent by mail. I can't see the tweet here, so I'm going to go over to it here instead, where we can of course see a few years ago Chase closed Kraken FX payroll account with 5 days notice by mail. We found out when checks started bouncing, got a notification letter in the mail the next day. No reason provided, people couldn't pay rent. Fortunately, it was able to cover out of the personal account, but definitely not a welcome solution or situation at all, right? Customers' risk levels to a bank are typically assessed based on regulatory compliance. Although the motives for the debanking are unclear, the Securities and Exchange Commission initiated a probe last year into the DEX's developers regarding the marketing and investor services they provide. Under US financial regulation, broker deals or dealers are required to register with the FINRA, let's make things easier for ourselves, before they can facilitate clients' trades. However, because funds are stored in consumers' wallets instead of the Uniswap DEX, and cryptocurrencies are not classified as securities, Uniswap, like other DEX and decentralized finance protocols, does not need to register with relevant regulatory bodies. According to CoinGecko, Uniswap is currently the largest DEX globally, with a 24 trade volume of $2.74 billion. Now, as far as where this goes from here, obviously none of us really know. Of course, I'll be keeping you up to date with anything happening, because this is the Web3 channel covering everything happening with crypto, NFT news, and the metaverse news in general. Have a great day, everyone, and I'll see you in the next Web3 video.